G'day folks, Jim here from Orchard Forex. It is Saturday the 6th of February and US stocks have finished near their latest all-time highs on Friday, while the US dollar took a step backwards after the US employment report and the non-farm payrolls figure failed to meet expectations, raising hopes of an imminent stimulus package for the US economy. Those hopes were later underpinned after the decision by the US House of Representatives to approve the budget stimulus package without Republican support if necessary, and that paves the way for Biden's COVID-19 aid plan in coming weeks. The US employment report saw 49,000 jobs added, which is roughly half the expectation of 100,000, but at least it's headed in the right direction. But having said that, it barely touches the sides really of the 10 million jobs that have been lost during the pandemic, and it seems to be that any economic recovery is going to be a very long and slow process. But anyway, we'll go and have a look at the technical outlook, starting with the trend table as normal, and there's some interesting possibilities for the coming week. So here we go, and starting with the US dollar. As you can see, as we suggested last week, we thought there might be some dollar strength, and that did occur, and the dailies now do look as though the dollar is generally going to be heading a little bit higher. The euro looks heavy, the Aussie looks a little bit heavy on the dailies. Having said that, the shorter term charts are correcting and may show some short-term dollar weakness as far as Monday, perhaps Tuesday is concerned. So that I think if that's the case, if we do see a stronger euro, stronger Aussie, then we should be probably selling into that strength, because I think all those currencies are going to go lower eventually, and the US dollar will continue its push higher, and that seems to be underpinned by the dollar index, which is showing daily and weekly strength potentially coming through in the dollar index, but in the near term some mild weakness. Stock markets, the US markets are strong at all-time highs, but they are approaching some overbought conditions. But having said that, the short-term charts are potentially pointing a little bit lower, but probably do seem to be a buy on the dip scenario. The local stock market here in Australia, that seems to be running out of a little bit of steam on the top side, and I wouldn't be surprised to see some mild weakness there later in the week. Gold had a tough run, breaking important support. The longer term charts do seem to be turning lower, but having said that, once again the short term charts show some potential for gold strength, and probably we should be selling into that. Silver's been a bit tricky because of the Robin Hood takeover of the silver market, but I think they've come a bit unstuck, and now the market's not really quite sure. I think stay away from silver. Oil, on the other hand, that's had a good week. The longer term charts turning higher. The short term charts need to correct a little bit to unwind their overbought situation, but I like to buy dips in oil. As far as the cross is concerned, not really an awful lot to go on. I like euro sterling lower, but there might be some selling opportunities in a near term bounce here. Aussie yen seems to be about to break to the top side, but elsewhere things look a little bit dicey. Euro Aussie, not really sure there. It does look a little bit heavy, but I think there's better things to trade at the moment. So without further ado, we will go and have a look at the charts and see what they've got to offer. Okay, so starting with the dollar index, which has just finished the week at 91 the figure, and the 4-hour charts are showing some relatively strong weakness. I think we could see the dollar continue to head to the downside for the first few hours at least of Monday. Now it's quite an interesting chart here really. We've got the this reverse head and shoulders with the neckline here, sort of the shoulder and a head and a shoulder here. The neckline, we broke above that. We also took out this long-term resistance here, and basically we've held above it. It looks like it's going to be tested Monday, Tuesday, where there's good support below 91 at the various levels here, so 90.86 being the neckline, the 100-day moving average 90.60 odd, 90.50 being the original trend resistance, and then back down here to the 200-day moving average at sort of just under 90.35 or so. So I wouldn't be surprised to see heading into that kind of area. but the longer term chart suggests that if we do see a further dip, that could well be a decent buying opportunity. Ideally, we should hold the neckline, but I'm not sure that that's going to happen with the way the 4-hour charts are looking. So give yourself a little bit of leeway, but to look to buy that dip. And if we head forward to the dailies, you can see that the upward momentum looks reasonably strong on the indicators. You can see the head and shoulder, inverse head and shoulders better here. Ideally on the top side now, we'd look to 91. Well, we need to get above last week's high, which is around what's that level? So 90.75, was it? 90.50. Yeah, 90.58, and that could take us on to the 100-day moving average around 91.85, and beyond there we've got decent resistance up around the FIBO level at about 92.5. If we go further out to the weeklies, you can see that these momentum indicators are still relatively oversold and definitely crossing higher, so I think further dollar strength down the track is probably on the cards, and I kind of think that eventually this 92.5 level will come into play, at which point it's possibly going to be a decent area to look to sell the dollar again, but I wouldn't hurry into it. I think the market's net short, quite net short already, looking for a weaker dollar. So a bit of a squeeze to the top side wouldn't hurt. But longer term, throughout the year, I think as the stimulus package comes into play, the Fed are going to be pumping the economy with cash, and I think that'll undermine the dollar and send it lower, but that's a longer term game plan. So we'll go forward and see how this looks to be playing out in the euro. Okay, so here we have a 4-hour chart of the euro, and as you can see, we've got the head and shoulders scenario here. Neckline, we've broken through the neckline, we've broken through the longer term support all the way down to 119.5 or so, 119.40. But we've bounced back right, and we're sitting right on this neckline here, which should act as resistance. So we've got some decent resistance here. I would be looking for a move back towards this, or 120, so at 75, 120, 123 quarters, 121 the figure, where I'd be looking to sell into it for the next leg lower. But in the meantime, there will be decent support at the 119.5 level. I'm not sure that we're going to see that down there on Monday. I think the first move might be higher for the euro, but if we then move forward out to the dailies, there is some weakness coming through. We managed to sit above this, or on the supports, within the 100-day moving average and the 23.6% FIBO retracement of this move up from to 106.30. If and when that gives way, then I think we look to a deeper correction, possibly down to about 117. That's a way off yet, but I think that could be the direction of it. And if we look out to further to the weeklies aren't showing us a great deal, so it may end up just being pretty choppy. But I just think there may be a little bit of weight to the downside. So my personal view just for the time being is to be looking to sell euros into a rally. First time round, I'll be taking them back if we do see back down 119.5, but below there, as I say, then I think we possibly can head lower. But I think you're going to see decent buying there in the interim. Looking forward to dollar yen now. So dollar yen has been a pretty nice trade really ever since a couple of weeks ago. I suggested that I think we were going to break to the top side out above this trend resistance. So this daily chart has seen us move up from sort of this 103.80 resistance up to a high of 105.80. So, and in doing so, it tried the 200-day moving average, hasn't quite taken that out yet, but the daily indicators are pointing higher. So it wouldn't surprise me to see another test of that, and eventually see a move to 106 and the greater trend resistance to 106.5. Where I'd probably be looking to sell dollars, to be honest. But keep an eye on US bond yields, as if they continue to head higher, that's going to be pretty supportive of dollar yen. So dips are going to be a little bit thin on the ground. But right now, with dollar yen trading at 105.35.40 or so, I'd be looking to buy dips on Monday, Tuesday in the 104.80, 105 area, looking for the next leg higher towards 106. Sterling. Here we have a 4-hour chart of sterling, and that remains pretty strong, really. The vaccine progress in the UK is outdoing that of the EU, which is in complete chaos. And I just think the flexibility that the UK will now have, being away from the EU, is going to help sterling, and the market seems to be bearing that out. We're struggling badly at 137.5, but eventually I think that is going to get taken out. We haven't managed to really get above it. Well, we've been trading here since the beginning of the year, really, within a fairly tight range. The Bank of England meeting on Thursday, we were seeing some softness in sterling due to some soft data, really. But the Bank of England's meeting saw a quick reversal on Thursday, that was, and we're finishing at 137.30, just below the these highs here, which are 2 or 3 year highs. We go and have a look at the dailies. This trend resistance here is proving problematic, but eventually I think we are going to overcome it, although having said that, the indicators are not showing us a lot. But if we go further out to the weeklies, you can see that if we take out this level here, this 137.60, and we're trying desperately to do so, there really isn't an awful lot to stop it going to sort of 140 really, and then potentially higher here. Now, if this is a reverse head and shoulders, as I think, and I've said last week, if this is a reverse head and shoulders, from the base to the neckline is a 20 big figure move, so that would take us towards 155. I think that's the reason why you should probably be short euro, long sterling for the trade for the next, well, for a long-term trade, because I think that's going to be the way of it. I think we're going to see euro weaken relative to sterling over the course of the year, and we're going to have a look at chart there in a minute. So moving along to dollar Swiss, and as I said last week, this was really the play of the day. We had this beautiful looking head and shoulders here. It finished the week just under it, but it took out that level, took out the neckline, and really hasn't looked back until Friday. We saw this bit of a sell-off, and I think we're going to see further dollar weakness taking us back towards the neckline. And I think this is really what you need to be looking at for Monday, Tuesday. I would be looking to buy a dip down towards this 89.40 level. But with a pretty tight stop, I guess. You could probably put a stop loss just under 89, the figure, so it's a pretty tight stop. Eventually, the target for the head and shoulders, as I said last week, is up around this 91. Now, we've more or less, we've made a good way there already, but I just think any dip should be bought, and you look to sell it around 90, 91, the figure. That's if we go and look at the dailies, you can see that they are pushing on higher. We've failed to take out so far the 100-day moving average, but eventually I think we will, and can possibly head up towards, there we are, it's the FIBO level at 90, well, basically 91 the figure. So that's a target, and I'd be squaring up there, possibly looking to go short even, but until then, stay long dollars. The Aussie. Here we have a 4-hour chart of the Aussie, and that the Aussie made the most of the weakness in the non-farm payrolls and the soft dollar on Friday. Saw a rally back up to 76 3/4, but it hasn't really done an awful lot over the course of the week. It's been choppy down to 75, 70, and really above 77. We didn't really see it above there. So it wouldn't surprise me really to see more of the same below this. I don't think we're going above this top at 78 for the time being. So my own view is that we probably do have another test of 77, probably be looking to sell it up there if anything, and then heading out towards the dailies. They're actually pointing a bit lower, so we're sitting above this trend support, and the brown line here is the 55-day moving average. I think you'd probably sell it into 77 plus with the dailies pointing a bit lower, looking for a break of the downside, possibly taking us back to sort of 74 the figure eventually, where this top and the 100-day moving average are come, but that's some way off at this point in time. 75, 70 is good support, and we may not even see it break below there. It may just be another sideways choppy week, but my view really, sell it above 77, initially buy it back below 76, but be prepared to go with the flow. If it breaks 75, 70, possibly down towards 74, but that is some way off yet, I think. The Kiwi, I won't spend any time here. It's chopping around. We've got a high of, it's 72.40, 71.10. It's trading within that range. If I'm right on the Aussie, then if we break below 71 the figure, then we can head back down lower to sort of 70.35, maybe 70 cents. But there's no real momentum in the 4-hour charts, and the dailies aren't showing us much either. So I think there's better things to trade. There's good uptrend support just here. where's that, 70, 60, that's some way off at this point in time, but worth bearing in mind. Okay, so that's the currencies out of the way. Actually, I'll go and have a look at some of the crosses. So here we have a weekly chart of euro sterling, and when I pointed this out 2 or 3 weeks ago, we were sitting back here to sort of 89, 88 and a half or so, with support at the 100 and 200 week moving averages. Now, I think I said I liked it lower, and we have eventually broken down, and we actually saw a bit of a run on late in the week. But this move here, I don't think is nearly done with yet. We're going to find support down here at sort of 86, 70. And eventually down here at just above 85, 85 and a quarter or so. That's some way off, but the indicators are pointing lower. And if we come back to nearer home, we'll go to the daily charts. As you can see, it's been a steady climb lower, and the daily indicators do look a little bit heavy without really. I just think we're going to have a slow drift off. I don't think euro sterling is going to have a huge move in any direction one way or another. But as you can see, this area here is going to be decent support, 88.70. And then I think 80, 85, 60, and then you go way down here. But there's plenty of work to do before then. The 4-hour charts actually show the potential for a bit of a bounce here, so I'll be looking to sell into strength. And really, I guess this high here, 88.30 or so. And this area here, which is the 23.6% fever, and that long-term trend support we just saw on the weekly charts at 88.60. Not sure we're going to get there, but certainly I'll be looking to sell into it if we do see it up there. And as far as stop loss is concerned, you'd really put a stop loss above here, about above 89.20 now, I think. But yes, I think that's a good long-term trade, and eventually I think we're going to hit go below 87, and I wouldn't be surprised to see euro sterling head towards 85, the figure in the longer term. The other cross that I like at the moment is Aussie yen, and here we have a daily chart of Aussie yen. Now, if this is going to go higher, I suspect in the near term at least it's going to be more on the back of yen weakness than Aussie strength, as we just pointed out in the Aussie chart. But we've got some good resistance here. The dailies are not actually showing us an awful lot, so it may be that we just continue to chop around. But if we can take out these highs here, which tail in with this high way back here in April 2019, then there's not a lot to stop us heading on to sort of 82 and possibly even to 83, 84. So it's something to keep an eye on. A break back below sort of 79, I guess now, would negate that and suggest that we've made a medium-term top here and head lower. The weekly charts also look mildly positive. So as I say, I prefer to be long than short the cross. The 200-week moving average, that comes in around that 79, the figure as well. So that's going to be good support if we do get back down there. So just bear that in mind. I think that's probably enough on the crosses. There's nothing really else that interests me. Oh, actually, one thing. This is a cross I don't really trade in Australia. It's too hard, but this is sterling yen, a sterling yen daily chart. Now, sterling yen is at levels now, last seen in February 2020. So basically back to where it was when the pandemic started. If we can take that out, then there's nothing really to stop sterling going back up here to this 147, 148 level. This is going to be strong resistance. I wouldn't necessarily buy it right here, but the trend appears to be up and accelerating. So looking for dips, it doesn't seem to me a bad way to go. If we quickly have a look at the weekly charts, the indicators here really underline the mildly bullish theory, and like I say, I think we can head higher. So not without wanting to buy it too aggressively just here. Looking for dips. It's 144 3/4 at the moment. If you were able to get it up to 143, 143 and a half, maybe below 143 in the next few days, probably not a bad trade for the medium term. So with that, we'll go and have a look at the stock markets. And here we have a weekly chart of the S&P 500, closing pretty much on its all-time highs. And you certainly wouldn't want to fight the trend. Having said that, it's worth noting that we're becoming pretty overbought here, and there is some quite significant bearish divergence on the RSIs. So that's just worth bearing in mind. But coming back closer to home, as I say, we close at all-time highs now. The market's getting itself ready for the economic stimulus package that we all hope is going to be unrolled by the Biden administration in the next few weeks. And the indicators not showing us an awful lot, but the MACDs might be trying to point a little bit higher. Once again, the RSIs do seem to be running out a bit of steam, so I'd be cautious. I'd trade it from a long side, but I'd certainly have a trading stop, because we could easily see what we saw last week. Let's go back to the 4-hour charts here. We could easily see a nasty downturn before another recovery. So I wouldn't be going in boots and all at these sort of levels, but certainly leave room. It's going to be, I think it's going to become increasingly choppy on the top side. But we're in the reporting season, and a lot will depend, I think, on how the company reports do turn out. But as far as the beginning of the week goes, the 4-hourly charts look fairly positive, and having closed on the all-time high, who's going to fight against that? Certainly not myself. With the Aussie market, where we're also about to begin our corporate reporting season, and this is a weekly chart, and it's as you can see, the Aussie's been the ASX has been pretty choppy for quite a while now, but it's making up its mind. It seems to want to head higher. I suspect we are heading higher. In fact, I'm more bullish here on the Aussie market than I am on the US market. The Aussie market's got plenty of room to be able to catch up. If we come back to the dailies, we're struggling really with this channel, but we've closed right at the top end of it. The dailies are not actually telling us an awful lot. Once again, the RSIs are perhaps running out of steam, so be a little bit careful. Have a trading stop, but I would still be trading it from the long side. And we move back to the 4-hour charts. This is the SPY, not the ASX 200. Let me just update this FIBO. So as you can see, that the white lines here, they indicate the channel that we've been in for a while now, and we actually have closed the week just right above the top of it. The 4-hour charts look vaguely positive, perhaps for Monday. I'm not really sure. I wouldn't be putting too much faith into the Aussie market. As I say, this is the SPY. I'll have a look at the ASX 200 in a second, but they do look vaguely positive. The dailies, as I said, were flat. As far as the ASX 200 goes, on the 4-hour charts, as you can see, we're right at the top of the channel. The MACDs possibly slightly bullish. I'm not really sure. Like I say, I wouldn't put too much faith in them. It could be a sideways day. The RSIs may be running out a little bit of steam. The dailies pretty much in the same boat as the SPY. But as far as the ASX is concerned, we've closed at this 68.25. We got up to 68.50 on Friday. My own view is if we can take that out, there's actually not an awful lot to stop us heading back towards these highs now. I think that'll depend on the success of the success of the US stock markets, and also the Australian corporate reporting season. So worth keeping an eye on over the next 2 to 3 weeks. Overall, though, I do prefer trading it from the long side, and I'll probably have a stop loss now under 6,700 as far as the ASX goes, looking to buy dips. But stop loss down at 6,700, but with a trading stop on the top side as the market moves higher. If it moves higher, I'd be raising the stop as well. Onto the commodities and gold. Well, gold finally took out the support at around 1,800 on Thursday. Got all the way down to sort of 1780. It has recovered though on Friday. It got back up to 1813, care of a weaker US dollar, but remains below this trend support, which comes in at around 1823 at the moment, above which you've got the 1848 is the 200-day and 1870 is the 100-day moving average. They're still a long way off. They're going to act as resistance. Probably a sell, I think, if we just see any decent strength. The dailies are pointing lower, a little bit lower, and the weeklies equally look pretty heavy. My own view is, as I said last week, that we can come down. I think we're going to retest at some stage this 1765 level, and if we get below there, then I think we can see quite a deeper correction to 1700 and possibly lower. So my own view is sell it towards sort of 1840, 1850 if we see that. Stop loss above 1870, but looking for 1765 initially. Silver was all over the place last week. It got up to above $30 at one stage and closed back below 27. So some pretty huge moves on the back. Let me just blow this up. Pretty huge moves on the back of the Robin Hood affair. I don't really know what to think of silver here, so I think I'd just leave it alone at the moment. As you can see, it did gap higher on Monday, Tuesday. All those guys who bought it have been taken out, really. The 4-hour charts are not showing us a lot, so I think we're just going to be in for a choppy mess as the market unwinds itself. There are definitely better things to look at, so I'm not going to go into that too deeply. But one thing I do quite like, though, is oil, where WTI, West Texas Intermediate, had a big week. We've been in this 50-55 range for quite some time, and eventually it broke and it's closed above $57 a barrel and is looking pretty positive as far as the MACDs go. Coming back nearer home, the dailies, here's the channel that we were looking at. We've spent 3 or 4 days above there. I'll be looking to buy dips now. Stop loss, certainly, if we broke back into the channel, which is a sort of 54, the top, I'd be getting out of it, because then we could see a bit of a steeper sell-off. But as far as Monday goes, the 4-hour charts are showing us to be pretty overbought at this kind of level. We haven't really had any kind of pullback at all. As I say, I like it higher, but just leave room. This 53-54 level that was the previous top, as I say, that's going to be decent support. We might not get below this low here, which is sort of 50, call it $55. So that's still $2 away. I'll be looking to buy on dips down towards there, really, with a stop loss, as I say, placed under these highs here. So that's about it. Oh, as far as topside targets go for oil, as I've said before, this long-term trend line going way back when, I'll show you in a minute, that's coming in at just around $60. So I think we're probably going to go there. Let me just blow this up a little bit. Here you can see on the monthly chart that trend line goes all the way back to 2014. So it's going to be a fairly serious resistance. And above there we've got the 100-a-month moving average, which comes in at 62.5. But having said that, the indicators are looking good to me. And like I say, buy dips. We've also got, we're at FIBO pivot level here, 50% of the whole move down. So we're going to muck around here a little bit early in the week. But as I say, buy the dips and looking for $60. Okay, that's about it as far as the markets go. We'll have a quick look at the calendar. Okay, here we are, and we're actually in for a pretty thin week as far as the calendar goes. So it's going to be mostly politics, I think, that dominate the agenda. Monday looks particularly thin. We've got the Centix out, but not much else going on there, really. Tuesday, we've got the NAB numbers, we've got Chinese trade balance, that might create some interest, but really there's not an awful lot else. Wednesday's going to be the busiest day of the week. We've got inflation numbers to come from China, and then later from Germany, and then from the US. So that'll make for the busiest day of the week, I think. And really beyond there, there's not an awful lot. We head into the Chinese New Year next on Thursday, so it's going to be a pretty quiet week of it for Asia particularly. Manufacturing data out of the UK, and that's really about it. It's pretty thin on the ground, so it'd probably be a corporate reporting season and politics, not necessarily in that order, which dominates the price action for the coming week. So with that in mind, we'll leave it there for now, and we'll be back next week with another outlook. Cheers. Thanks very much.